Hello, everyone, and welcome. I'm Amy.
And I'm Tom. Good to be with you all.
So today we're taking a look at the financial markets for July 9th, 2025. And wow, what a day.
Yeah, definitely some significant moves driven by, well, some pretty major global events and, importantly, policy announcements.
Exactly. Our goal here, as always, is just to help you quickly get your head around the most important bits, the surprising facts from all this data, sort of a shortcut to being up to speed. And today, there's been some serious volatility. I mean, especially around these new tariff announcements.
That's right.
The copper market seems to be right in the eye of the storm, wouldn't you say? And we're seeing ripples, spreading out to oil, gold, currencies, even corporate news.
It's fascinating, really, how quickly just one policy announcement can send these shockwaves
Hmm.
across sectors that, might seem unrelated at first glance.
Totally.
And we saw that immediately in the main indices, didn't we? The S&P 500 dipped just slightly,
Yeah.
0.07%. The Dow Jones down a bit more, 0.37%.
Sure.
But the NASDAQ 100 actually managed a tiny gain, 0.07%. And importantly, long U.S. yields, think the 30-year Treasury, those edge up, rose by 1.2 basis points to 4.93%.
Right. Basis points, hundredths of a percent. Small move, but tells a story about expectations.
Exactly. A subtle shift, but it matters.
But it's okay, the big one. The real earthquake today had to be President Trump's announcement on copper, a 50% tariff.
Yeah, 50% on copper imports.
Tell us about the market reaction. It must have been huge.
Oh, it was anything but subtle. U.S. copper prices, they surged, hit an all-time high.
All-time high.
Yep, futures contracts soared by, get this, 13.12%.
13% in one day.
In one day. To give you some context, that's the biggest single-day price jump for copper since 1968.
Wow, 1968. That's staggering.
It really is. It's not just a price spike. It's a stark reminder of how one decision can just shake the foundations of a commodity that's, well, it's everywhere.
Right. And it's easy to forget, maybe for those of us not trading commodities every day, just how critical copper is. Why does it matter so much? Its importance just seems to grow and grow.
It absolutely is growing. I mean, think about it. Copper is essential for electrical wiring, obviously. Motors, construction, industrial gear.
Standard stuff, yeah.
But now, more than ever, it's critical for electrification, electric vehicles, charging infrastructure, military hardware uses a lot of it. The power grid itself relies heavily on copper. Then, countless consumer goods.
So it really is the circulatory system of the modern economy.
That's a great way to put it, yeah. And the stated goal behind this tariff, the official line, is to boost domestic production here in the U.S.
Okay. But this copper tariff, it didn't just come out of the blue, right? It feels like part of a bigger strategy. What else is going on with trade threats?
You're right. It's definitely not in isolation. We've also heard talk about tariffs potentially up to 200% on pharmaceuticals.
200%.
Yeah. Although there was some mention that maybe there'd be a delay on that, perhaps a year-and-a-half reprieve. We'll see.
Okay.
Then there's a proposed 10% tariff aimed at the BRICS nations: Brazil, Russia, India, China, South Africa.
And the reasoning there?
The administration alleges that group is trying to undermine the U.S. dollar. Plus, semiconductor tariffs are still kind of looming in the background.
Right.
And the tension with the EU is particularly interesting.
Yeah.
Despite reports that trade talks were actually making some progress.
Yeah, I saw those reports.
The president stated he was maybe just 2 days away from sending a letter threatening steep tariffs on the EU if a deal isn't reached quickly.
So more pressure tactics.
Seems like it. And this comes after similar letters went out on Monday to, I think, 14 other countries, mostly in Asia. Those outlined higher tariffs set to kick in August 1st.
August 1st? That's soon.
Very soon.
Yeah.
And there's a very firm stance on extensions. We saw a quote from Truth Social, the president's platform, saying, and I'm quoting here, "Tariffs will start being paid on August 1st, 2025. There has been no change to this date, and there will be no change. No extensions will be granted."
Wow. That's unambiguous. Crystal clear.
Absolutely. Leaves no room for doubt.
So how are other countries reacting? You mentioned Japan and South Korea are looking to negotiate.
That's right. They've announced they want to talk to the U.S., presumably to soften the blow or get exemptions.
And the EU, we said they seem to be in a better spot.
Yeah, it appears so. Sources are suggesting the EU won't get one of those tariff letters, and they might even get exemptions from the baseline 10% tariff rate the U.S. is talking about more broadly.
Huh. Interesting. Why the difference, do you think?
Well, that's the big question, isn't it?
Yeah.
Is it a strategic divide-and-conquer approach from the U.S., or maybe just pragmatism, avoiding a full-blown trade war on too many fronts at once?
Could be.
It's also worth noting there's apparently some disagreement within the EU on how to handle this. Germany seems keen to resolve things quickly, find a deal. France apparently prefers a more resistant stance.
Always complicated European politics.
Always. But the key takeaway here is, it's a multi-front tariff situation, not just copper. It's creating this wide uncertainty and forcing countries into some tricky negotiations.
Definitely a shifting landscape. Okay, so while all that tariff drama was unfolding, other markets were moving too. Let's talk energy. Oil prices were up.
They were. Brent crude, the international benchmark, was up 0.63%, hitting $70 a barrel right on the nose.
$70, okay. Psychological level there.
Exactly. And WTI, the U.S. benchmark, was up 0.87% to $68.18 a barrel. Both reached two-week highs.
So what's pushing oil up? Is it just the general uncertainty, or are there specific factors? And what does this mean for, us at the pump?
Well, it's actually a mix of several things pushing prices higher. First, unfortunately, renewed geopolitical tensions.
The Red Sea again.
Yeah, renewed Houthi attacks there. There was a tragic incident recently. A drone and speedboat attack killed 3 seafarers on a bulk carrier off Yemen.
Oh, terrible.
It is. And these attacks, they forced ships, including tankers carrying oil and fuel, onto much longer routes around Africa, more expensive, takes more time. That tightens supply availability.
Right. Adds a risk premium, too.
Definitely. Second factor, supply forecasts. The U.S. Energy Information Administration, the EIA, they actually revised their outlook. They now expect U.S. oil production in 2025 to be slightly lower than they thought before.
Why is that?
Mainly because lower oil prices earlier this year prompted U.S. producers to kind of slow down drilling activity. So less future supply expected from the U.S.
Okay, makes sense.
Third, market dynamics. You mentioned the copper tariffs concerns about those potentially hitting industrial activity could maybe counterintuitively impact energy demand forecasts.
Yeah.
But we also saw what's called technical short covering.
Ah, the traders who bet on falling prices having to buy back.
Exactly. As Brent crossed that $70 mark, it likely triggered some automatic buy orders, pushing prices up further. And finally, refining profitability is up. U.S. gasoline and diesel prices have been rising lately, which means refiners are making more money.
The crack spread.
Yep, the diesel crack spread hit its highest point since March 2024. That encourages refiners to buy more crude oil. And related to all this, the EIA also bumped up its price forecast for 2025. They now see Brent averaging around $68.89 and WTI around $65.22.
So a confluence of factors, really. Geopolitics, supply adjustments, trading dynamics, refining margins. It sounds like U.S. producers especially are juggling a lot right now. What's the single biggest challenge for them, would you say?
That's a tough question. Beyond the immediate flare-ups like the Red Sea, I think it's the broader economic uncertainty. These trade policy shifts create unknowns. Plus, you have OPEC plus potentially increasing supply later in the year. And the ongoing Iran-Israel conflict is always a background risk. It just makes long-term planning very, very difficult for producers.
A really complex web. Okay, let's shift gears again. Other major financial indicators. Gold. This one surprised me a bit. Gold actually fell. Over 1%, down to around $3,300 an ounce. Lowest in over a week.
Yeah.
That seems counterintuitive, doesn't it? With all this tariff talk and uncertainty, you'd think gold, the classic safe haven, would be climbing. What's going on there? What's the hidden story?
It is a bit counterintuitive on the surface, yeah.
Yeah.
It really speaks to how markets weigh different factors. The main driver for gold's dip seems to be, perhaps ironically, renewed optimism about potential U.S. trade deals.
Ah, so the hope of resolution.
Exactly. That positive sentiment, however tentative, reduced the immediate demand for safe haven assets like gold. People felt maybe a bit less need to rush into safety.
Okay.
And that happened alongside 2 other things that typically weigh on gold. A firmer U.S. dollar.
Right, gold is priced in dollars.
Precisely. And rising treasury yields.
Yeah.
Higher yields make non-interest-bearing assets like gold less attractive by comparison. So it's kind of a perfect storm against gold, paradoxically driven partly by hope.
Fascinating. Sentiment is such a powerful, sometimes confusing driver. Okay, what about currencies then? How did they react to all this?
Currencies definitely reflected the trade news. The Japanese yen took a bit of a hit after the president doubled down on the tariff plans. The dollar gained against it, up 0.36% to 146.53.
Okay.
But the euro, reflecting that potentially better position regarding U.S. tariffs we talked about.
Right, the idea they might avoid the letters.
Exactly. The euro strengthened against the dollar, up 0.12% to 1.1722 cents. And it hit a one-year high against the yen, actually, up 0.58% to 171.98. So currency markets seem to be pricing in that relative EU advantage.
Interesting. And the British pound?
The pound saw a small dip on the day, down 0.12% to $1.3584. But, stepping back, the pound has had a really strong run this year. It's up about 8.5% against the dollar year to date.
8.5%. That's huge for a major currency pair.
It is. It's actually on track for its best year against the dollar since 2017. So despite the little wobble today, the bigger picture for sterling has been quite positive lately.
Got it. Okay, let's round out the financial picture with fixed income. Bonds, interest rates. What happened there?
Right, fixed income. U.S. Treasury yields generally moved higher. The 10-year yield climbed 2.5 basis points to 4.41%. The 30-year yield, as we mentioned earlier, up 1.2 basis points to 4.930%.
And that's driven by the tariff news and maybe upcoming auctions?
Yeah, those seem to be the main influences. Also, there was a $58 billion auction for 3-year Treasury notes, and demand was described as somewhat subdued, maybe a bit of investor caution there.
Okay.
On the supply side, the Treasury announced plans to issue more short-term T-bills, the 4, 6, and 8-week ones. That's apparently to help rebuild its cash balance.
Right. And what about expectations for the Fed? Are traders changing their bets on rate cuts?
They are, yeah. Looking at Fed funds futures, the market is now pricing in a much lower chance of a rate cut happening this month, in July, only about 6.2% probability now.
So July's pretty much off the table in their view.
It seems that way. September is now seen as the most likely starting point, with about a 64.6% chance priced in. And importantly, traders are expecting fewer cuts overall by the end of the year. They're now pricing in about 49 basis points of cuts, down from around 64 basis points just last week.
So the market's dialing back its expectations for Fed easing quite significantly.
Exactly. That shift reflects how investors are digesting all this news, the tariffs, the economic data, inflation signals, and recalibrating what they think the Fed will do in response.
And across the pond, European bonds.
Similar moves higher in yields there, especially longer-term German bonds. Their yields hit 6-week highs. The 10-year bund yield rose 4.7 basis points to 2.692%.
And why was that? Less focus on U.S. tariffs for them.
That seems to be part of it. With the immediate threat of new U.S. tariffs perhaps receding for the EU, market focus shifted back towards European factors, like government spending plans and upcoming bond issuance. We also saw yields rise for other European countries like Italy and France, and there was new bond supply coming from Germany, the Netherlands, Austria, and the UK. It shows how interconnected it all is.
Absolutely. It really underscores how these big macro events ripple through every part of the financial system. But, even when these huge waves are crashing, there are always interesting stories happening at the company level, how individual businesses are navigating things.
That's so true. The macro environment sets the stage, but companies make their own moves. We saw a few interesting nuggets today. For instance, Amazon's Prime Day sales apparently got off to a slower start. Reports suggested sales were down almost 14% in the first few hours compared to last year.
14%. Could that be a sign of consumer caution amidst all this uncertainty?
It could be, yeah. Definitely something to watch as a potential indicator for consumer spending health. On a more positive note for one company, Boeing announced really strong delivery numbers for June.
Oh.
Delivered 60 aircraft. That's their best month in about 18 months. So that suggests maybe their factory processes are improving, and significantly, they've resumed exporting jets to China again, U.S.-made jets.
That's big news for them, getting back into the China market.
Huge. Elsewhere, SpaceX, Elon Musk's company, is reportedly talking about raising more capital and selling some insider shares. The potential valuation being discussed.
Around $400 billion.
$400 billion. Wow. Shows the appetite for these big private tech valuations is still there.
Apparently so. And one more, Walt Disney and Hearst are reportedly exploring a potential sale of their joint venture, A+E Global Media. That's the parent company of channels like History and Lifetime.
So maybe some strategic changes happening in the traditional media space too. Yeah, likely reflecting the ongoing shifts in how people consume media. Cable channels facing pressures. So yeah, even amidst the tariff storms, individual corporate stories show resilience, challenges, and strategic pivots.
Okay, so let's try and pull this all together. What does it all mean for you listening?
We've seen just how tightly linked our global financial system is. A single policy decision, like that copper tariff, sends waves crashing across commodities, currencies, bonds.
Even impacting sentiment around corporate earnings or consumer spending, like with Amazon.
Right? And the energy markets are caught in this complex dance of geopolitics, supply forecasts, and refining economics. It paints a picture of a market that's constantly reacting, constantly adjusting to a really dynamic and sometimes unpredictable world. It certainly does. And perhaps that leaves us with a final thought or maybe a question for you to ponder. As these trade policies continue to evolve and global tensions, well, they don't seem to be going away. How might these short-term market reactions we've discussed today actually start to reshape longer-term investment strategies and maybe even reshape international economic partnerships down the road?
Hmm. That's a really important question to think about, the long-term consequences.
Indeed. Well, thank you for your attention today.
Yes, thank you for joining us. You can subscribe our podcast if you like it.
And we hope you'll join us again. See you next time.